Hello and welcome to Crux Investor. I caught up earlier today with Gord, who's the CEO of Minnova Corp. They're a gold developer listed on the TSX-V. And if you want our thoughts and opinions on that conversation, their plans going forward, and indeed the company itself, you can get it at cruxinvestor.com/club, where you can also find detailed company reports. There are market summaries from experts from around the world on a variety of commodities and companies. There are training videos on there to help you get a little bit better at doing your own diligence, as well as summaries of other interviews that we've done to save you a bit of time. And of course, why don't you join our thriving community of investors sharing their thoughts and ideas with each other in a nice, safe environment free from trollers and abusers. Wouldn't that be a nice idea? So that's cruxinvestor.com/club. Of course, we love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, take a look in the description. Hey, Gord, how are you doing, sir?
I'm doing great, Matt. How are you doing today?
Not too bad. But I am in a positively balmy 10 degrees centigrade. You're not. Where are you? Tell us.
I am happy to be presenting to you from the PL mine site in central Manitoba. I'm about an hour's north of Flin Flon, Manitoba, and it is a balmy minus 32, minus 33 currently. I had a hard time starting the truck this morning because it was very cold outside. But sun is shining, and I'm looking forward to taking you and your subscribers and your watchers on YouTube and all of your platforms around the PL mine site, at least within Wi-Fi, and specifically into the PL mill.
Okay, well, fantastic. Look, I'm really pleased to be speaking to you because I enjoyed our chat back in August, I think it was. And anyone wanting to understand your business plan, your strategy, your plans for the next few months to go back. We'll put a link to that below in the description below. But today, I just wanted to catch up and see how you've been getting on, because you were going to try and do a number of things. So what's been happening since August?
Since August, we drilled about 13 or 14 holes, 1,700 meters. Again, all of our drilling at PL is relatively shallow. I don't need to be drilling monster deep holes at this point. Our resource and reserve are from 0 to about 200 meters vertical, give or take. We were drilling outside of the resource, so step out drilling, if you want to call it that, still on the mining lease. So all of that future potential development will go into the mill behind me over here. So we drilled that. We had some very good results. We identified extensions to known mineralized trends. We discovered new mineralized trends. We discovered near surface, very high grade mineralization, like literally at surface as the drill collared, completely unknown previously. We've opened up the entire property, both on the lease, the permitted lease, and off the lease, to a developing exploration model with new structural interpretation. So it was like a gangbuster year for breakthroughs in geological model, in resource expansion potential, in exploration expansion potential, and all in the context of a market that's starting to perk up and appreciate gold as gold leverage investments, little junior mining companies, emerge cos like us as an example. So like the message I want to get across to you and your listeners today is that we've got two value propositions. One is as an emerge co, which you can do a DCF and NPV the project. The feasibility study is done. We're working on project finance. So we're in a certain spot on that sort of mine cycle, mining life cycle curve, the SON curve, some people call it. But we're also still very much have early stage exploration potential. We've never really stepped off the mining lease to explore. So we've just opened all of that up to identified trends and identified structures. So we're looking forward to getting drilling again in January and February. One of the reasons I'm here at the PL mine is I'm basically reviewing some of the work from the summer, looking at the core, preparing for the drill program coming up. I'm also going to be hosting some service suppliers, contractors to come back in and update feasibility study numbers. That's over the course of the next week or so before Christmas, and then again in January as we get ramped up. So we're constantly busy here at the PL mine, and I can call it that because it's a mine. You're going to see it when we go for a walk.
Okay, we better go for a walk, I think. Because I mean, you've answered all the questions. Well, you answered a lot of the questions I was going to ask. You know, I think it's important that people, like I say, refer to the previous interview, because when we looked at the infrastructure which you've got there, you've kind of inherited there. It really helps in terms of making this a low capex project for sure. The drill results is what everyone's interested in, but you want to show us today what you've got a mill, and when that's going to start throwing off cash, I guess, was the question I'd be keen on.
Yeah, well, first of all, let me go grab a coffee, and because I've unwittingly duped you into part of my hiring program. So I wanted people to see my 25-man camp. Let me just flip this around, and we'll go for a walk. I'll grab a coffee, and we'll grab a quick sip. So we got a very well-equipped trailer camp here at the PL mine site. Man, it can hold no problem. I'm just going to the kitchen, grab my coffee, which I left on the desk about 20 minutes ago. There's a view of the kitchen, very nicely, well-equipped. So I'm looking to staff this place up with good, solid technical people over the next coming months, weeks. I'll start advertising for people any minute. Now, sorry, I'm going to flip this back around to me. There we go. Sorry about that. I just need one sip. I told you I was going to hijack your presentation today.
You did. I thought you were kidding, but you meant it.
No,
I don't mind. I don't mind actually, because it's very rare that people have to sort of don't really understand what these places look like, or the kind of where people have got to work in the middle of minus 35 degrees. So what is it? Is that literally just a porta cabin?
Yep. Okay. So here, I was going to do this all outside today.
Yeah.
So I was set up with a desk and the mill behind me, which you can't quite see. You're too low. There we go.
Right.
I'll put my coat on. So, I invite people up here by Zoom call, by WhatsApp call. We go video. I walk them around. Those people that have lots of experience, whether it's an investor that's looking at projects that are, advanced stage, lower risk, de-risked, permitted, doesn't matter what stage you're at. We can pretty much, tick a lot of boxes for any investor looking for leverage to gold price, higher gold price. Again, the feasibility study that we did here was done in 2000 and sorry, I forgot my toque. In 2017-18 at $1,250 gold. The project looked good then. It had a positive feasibility study, IRR plus 40, 50%. Obviously looks better at $1,800 plus gold. And this was all highlighted in a July 30th press release. You can always refer to the feasibility study for details on development. So what I wanted to do was, and if the signal will hold, we will go on a walk to the mill in just a second. I'm just gonna get this fixed. There we go. So again, there's the camp. We put it right at the mill site here. If I turn around and point you into the sun, which is probably not the best thing to do, the core shack and portal, the original meters down the road that way. I'll be down at the core shack later today. Obviously, I wanted people to see, sorry, spin her around here. I wanted them to see the infrastructure here. That's a 1,000-ton per day mill that's in excellent condition, considering it's been sitting idle for 30 years. It operated for 1 year back in 1988. There's no reason why that mill behind me should be idle today, given gold price, feasibility study, market conditions, etc. So you and your listeners will help me get it going. So again, the back end, the tall thing sticking out at the back is the fine ore bin. It's a 3-compartment fine ore bin. It's specially designed for high grade deposits where you get variation in grade from stope to stope. So you can basically fill that mill with fill that fine ore bin with different grade of ores, and then blend them to get a nice consistent grade coming into the main mill, the rod mill, the ball mill. We'll go see that. That's the sort of the upper level. As you come through the middle, you'll see some transformers in the foreground there. Those are all in good condition, part of the feasibility study. They were all tested. 3-cycle, 25 kVA transformers. That all goes to the CapEx, savings on CapEx. The middle part of the mill behind me is really the flotation and leaching circuit to a Merrill-Crowe system. Down at the back end, you've got the office and management, and that little building just right here behind me is the assay lab. So we're going to go in, and then I'll flip it around. Right in the foreground here, the front end of the mill that I'm wanting the warehouse. It's quite spacious, and this is where we've been working on our metallic screen fire assay program. Check samples. That's all been documented in press releases. I'm just going to hustle in and talk as we go. Once I get up the stairs, the signal should improve. So stick with me, okay, guys?
Okay.
So Matt, here we are inside the mill. We're at the south end of the mill at the gold recovery end. It's a Merrill-Crowe cyanide leach circuit. You can see the cyanide holding tanks, mixing tanks here, all in good condition. There's the Merrill-Crowe system. And a bunch of, obviously, the tanks for barren solutions, pregnant solutions, as part of the gold processing here at the back end. Here, I'm going to run up the stairs and give you a view of the front end of the mill where the rod and the ball mill are. Basically, after crushing, the material comes into the mill here. We've got the rod mill right here. That's the rod feeder. We've got the ball mill over there, up to 1,000 tons of capacity in our milling circuit. And then from there, the process goes to gravity, and the gravity circuit will be upgraded to a modern gravitational or centrifugal system. And then the process will go into, or the tails from the gravity will go into the flotation system, and will produce a sulfide concentrate, which will then be leached. And I'll just go to the leaching area. Again, from the rod and ball mill, material then gets concentrated in first flotation bank of cells into a secondary bank of cells. Then there's a filter press, which will be actually replaced. That's probably one of the major components that will be replaced with modern equipment. And that pretty much covers off the internal workings of a very good condition, care and maintenance, 1,000 ton per day mill. Here we are at the back end of the mill, where I'm actually looking at the crusher right now. Again, oversized 1,000 ton per day crusher. You can see the conveyor belt system zigging and zagging back that would ultimately send a final crushed product to the fine ore bin. Again, that's a 3-compartment fine ore bin. I'm going to go up there and try to take a bird's eye view for you of the frosty surroundings here at PL camp just over there. The ore zone is sitting out there about 200 or 300 meters behind the camp, trending in this direction. You can see in the distance there's a bit of a road that goes to our water source, which is permitted. And then as I pan back around here, again, crusher, conveyor system, up to the fine ore bin. And that's where I'll head next. So Matt, just to finalize the infrastructure discussion, again, the crusher, all the conveyor systems in place, rubber needs to be replaced. You can see the haul road up to the crusher. Here's a bird's eye view of the mill looking to the southeast. You can see the ragged tailings deposition area, the snowy area, the former lake, now a tailings deposition area. And can't quite see it from here close. You'll see in the distance a stockpile, a snowy mound. That's the low-grade stockpile. The portal is just behind that. It's going to move around some steel girders here. The swampy area in the foreground, again a couple of hundred meters beyond the camp, that is the surface projection of the PL deposit. Again, it weathers negatively, so you get a swampy area there. Again, you can kind of see our proximity to the mill, to the deposit, to the portal infrastructure at the southern end of the deposit. It's still open in that direction to the southeast. And then the recent drilling that we did is the open areas where the snow is laying That area was new drilling outside of the resource that was done in 2020. Positive results. Step out drilling extended the zones and found some new zones, and those new zones trace on just on the other side of that small lake, which is trending to the northeast, called Hill Lake. The structures keep trending in that direction. So again,
thank you for indulging me, Matt, and your viewers. The whole point of walking you and your viewers and my investors, quite frankly, through the mill is to give them a sense of what stage of readiness this project is. Again, the capex on the whole project to restart the entire mining operation from the feasibility study is about 35 million Canadian dollars. We're going to update that and tweak it and optimize it. I think we'll come in around that number. The mill component of that, which we just walked through, is about 10 million Canadian. The replacement value of that giant facility, 80 kilometers away from the nearest major center, would be easily 75 to 85 million dollars Canadian, easily. That's a number we don't have to recreate. The road coming in here is there. The power line is set up to be reconnected. You saw the step down transformers. We've got rail nearby the mine site. We've got a mining community about an hour and 15 minutes away, Flin Flon, 100 years of mining. We're ready to go. That mill is just one very important component that helps keep our capex down. And associated with that mill, Matt, is the permit, Environment Act license 1207E, a little bit pedantic, but that enables us to get back into production quickly. So we can see near-term cash flow in an environment where gold price is rising. So real, true, bona fide, I know, leverage to gold price. Rising gold price.
Okay, so what you've demonstrated today, and by the way, interesting, I've not had anyone do that. We've had a walk through the infrastructure and you described some of the infrastructure around you. I get that, right? But let's talk about some of the numbers you mentioned there. 35 million bucks required to get this thing up and running, because 1,000 ton a day mill is impressive, but not when it's empty. So what are the next steps from you to start filling that mill? What do you need to do to start the process, little baby steps?
Yeah, I guess number one, I have to make my first critical hires, my technical team to develop the operational side of the project. If you look on our presentation on the website, the management and directors slide is half blank, right? And that's partly by design and partly unnecessary at this point. I kept the project and the company lean during the lean years, and now that the market is coming back, I have a great amount of confidence that we can start making our first hires. Again, I've been having terrific feedback from a number of very experienced mining engineers, technical people, process guys that are looking to put a feather in their cap, right? Turning something like this on after so many years of being dormant, but not broken, just dormant. There's people out there that are looking. So like I said, part of my walkthrough with you down the camp, it's a beautiful camp. Come and work with me here. We've got a beautiful mill to turn on. My first hire was actually my geologist, structural geologist, very seasoned guy, really to work on the model, to test the model, and to challenge the deposit for its continuity, its grade distribution, obviously, collect a lot of data. And that's all coming to fruition now in terms of the new geological model. Obviously, we've developed our own reserves and resources here that have been tested through a feasibility study process. So geologically, we're still evolving. It's now time to start evolving as a company corporately with new hires and get my technical team put in place. That's number one. Number two is obviously project finance. Get the capital in place to build the project at current gold prices. This project, it's got a pretty attractive IRR. We're talking triple digit. We're pushing 200% IRR at current prices. We're talking massive NPV, 5%, sort of standard stuff that the market and investors look at. There's a bit of a disconnect out there for us The infrastructure is one aspect of it. The value proposition is another aspect of it. Again, just read the feasibility study. It's our current market cap, and there's a big disconnect there. And part of that is marketing, and part of that is understanding the quality of the asset that we have. Because again, I'll still get questions from people going, that mill is so old, it must be rusting away. Right? It's got to be that old, or got to be that, bad. The reality is, and you've seen it, the mill is in actually very good condition. And like any mill that goes on care and maintenance, everything that should be cribbed up off its gears has been done. It was actually shut down very well, and it's ready to be turned back on. Nothing unusual or in industry about doing these things. It's really about doing them systematically and diligently. So project finance interest is there in the current environment. So that's the sort of second important step for us in getting going. And thirdly, I would say just marketing and communication of the story, our value proposition relative to other stories out there. I'll give you, I think, a reasonable comparison. A bigger company than us in terms of market capitalization, Ascot, they just raised $100 million plus in project finance. Their project is a restart. Their project has a big mill. Their project requires capital to refurbish the mill, to develop the underground. We have all those attributes too, but we haven't achieved traction in the capital markets. And again, I'm working on that diligently. That's why I'm hosting calls here, so people can see the level of infrastructure. They can appreciate the diligence that our board and our management team and quite frankly our major shareholders have invested in the project to properly de-risk it and get it ready to turn on. So those three things I think are really what we're focused on in the next 3 to 6 months. Oh, and then we got a bonus. The bonus is beyond the big blue box out there that's full of incredible amounts of equipment that are ready to turn on. It's beyond the resource and reserves in the ground that are behind me, literally 150 meters close to the mill. It's the exploration potential of the project, and that is evolving, quite nicely. And that's off the lease. So everybody wants blue sky. I get it, me too. We've got lots. We basically have demonstrated that some of the existing structures that are on the permitted lease extend off of the lease in through what we call the footwall tonalite. So now we've just opened up kilometers of strike length on strike away from the main deposit that open up all kinds of potential for for resource development and getting into the mill eventually.
Okay, so look, I appreciate the feasibility study, appreciate the numbers, IRRs, NPV, 5s, etc. All look good. Your market cap doesn't. Is that part of the problem as to why you can't get these project finance discussions moving? Because you can't hire people without money. You can't do marketing without money. So where's the money coming from?
That was in the past. Project finance is actually distinct from equity capital markets interactions. Like I'm dealing with guys that are, we're going detailed on the model, like model-driven investment, flexing the model like a banker. I used to be one, flexing it down for risk, flexing it up for upside, finding that happy spot in the model to finance the project. You might recall an email that I sent to you a while ago about one scenario that we were looking at, which was a gold loan, right? Not dissimilar from a stream, but another variation of that, where you're really selling the gold in the ground forward under certain conditions that deliver an attractive return to the investor, but also maintain a very attractive value proposition for the equity shareholders. So there's all kinds of scenarios out there from a project finance point of view that are completely distinct from our market cap. Now, that is not to say that my market cap is not super important. And you're right, we didn't have the capital to market aggressively. We didn't have the capital to hire aggressively. That's all changed now, right? We try to run the company conservatively, and now we're in an environment where we can tap the market more readily than we were able to do in the past. We did a small raise in July of last year. It was just a small raise just to get the wheels greased and get back on the project, generating news flow. We had 4 press releases out over the the balance of the year. 3 of them dealt with the drilling results, which were all very positive in terms of we were hitting good grades over mineable widths at shallow depths, on strike, positive step out results. We're opening up the exploration potential of the project. And then one of the last ones was really, what's the go forward plan? Much to your question, what's the go forward plan? Hiring people, continuing to de-risk the project, getting the consultants on site to update numbers and give us a good sense of where we're at. Plenty of interest in this project from the consulting community, experienced people with a critical eye. Like, that's the important thing. I'm not looking for cheerleaders. I'm looking for critical, technical, engineering, development feedback, and we're getting that. And that's just going to help the project, go forward.
Okay, talking of which, the question was, where's the money coming from and when?
Well, it comes from major shareholders, of course, that have been supportive of the company for a decade. New shareholders, following our last Crux interview, it was very well received by international investors. Europe, USA, broadened the level of interest for the company and the project way beyond Canada and the usual suspects in the resource sector. So I was really pleased. Many of those guys just want to participate in a private placement. They want warrants. They're longer term holders, especially the European guys. They have an appetite for near term production. Again, we're a project that's 12 to 14 months away from, assuming that we've got all the capital put in place, from 50,000 ounces of production per year. And at these levels, that would generate $60 million in after-tax free cash flow in year 1. Our payback period would go from 1.5 years in the feasibility study at US $1,250 gold to 0.6 years at current levels. So it's a pretty attractive project for certain investors that are looking for ounces in the ground and real development potential. And there's also the investors that they want to know the blue sky. Show me where the upside is. That this year's program, the 2020 program, was really all about firming up and pointing to the outfield and saying, this is the exploration upside, where we can trace structures, identify new mineralized structures, and really open up the exploration potential.
I hear that. It comes back to that. And I don't mean to grab it like a dog with a bone here, but it's the timing of when you're going to do that. Is the hold up the market? And by the market, I mean project finance market, or is the hold up you not getting the terms you want? I mean, when does that decision get made? Are you in a position, are there any terms on the table where you can make a decision? Because you've got a lot going for you. You showed us today the physical attributes, which I actually quite liked. I was sort of smiling the whole way through. So, but when do you make a decision? When can you make a decision?
We can make one any day. It depends on the money, and I'm not trying to dance around your very direct question. Look, we got 40 million shares outstanding, so we got a really tight capital structure. I know probably 50% of those shareholders with 4 phone calls. I'm one of them as a major shareholder, and I think management teams should be 100% aligned with their shareholders in terms of ownership stake. I think we'll be doing financings in stages. We can go from, just keep the drilling going while we're tapping that project finance market, or we can accelerate a bit more and we can do small open pit bulk mining, test mining on surface, or we can go to a little bit more elaborate program of a new portal and underground test mining. And you see many companies had great success with that. I think Wallbridge, going back a few years ago, they went underground for some test mining. Again, rising gold price environment when you're extracting gold ore is always a very positive situation. We can do all of those things under our current permit, and we can stage our capital requirements, in a I'd say, a financially judicious way versus ultimately what we'll need to do, which is, again, these are not big numbers. Some companies are doing very big numbers. We don't need big numbers. We're probably looking all in equity tied to project finance, probably in the range of $12 to $13 million. That's a big number when you got a $10 million market cap. So I'm not going to be going out and snapping my fingers to do that deal at current price levels. I'm confident that the market will start to understand and appreciate this project and accept its I think, pretty good value proposition. And we'll see higher prices, and then we'll tap the market as required to do that. And if the market's still not reflecting full value, then we've got to think of our other options. What are our other options? I've got a permitted mine in a good jurisdiction in a market that's going higher and higher, and I've got a broader sector, gold sector, where junior producers, senior producers, they're all wanting growth, depleting their resources and reserves on a daily basis. Sometimes they replace them as well. Here we're sitting ready to go, 50,000 ounces of production per year, which would probably go to 70,000 ounces in, after a couple of years. I got a satellite project in my back pocket, so to speak, approximately 8 kilometers away, called Nokomis, which is not part of the feasibility study. One of the things we'll do next year is that we'll start to do the work to get it incorporated into the feasibility study. So baseline studies as a satellite deposit, update the resources there to get them into a reserve category. That would add a year or two to our mine life. So there's all kinds of things that are positive attributes of this project that I hope investors will gravitate towards, but also potentially M&A opportunities as well.
So, but I'm struggling here because you're telling a great story, right? It's small, admittedly, and the market cap is small, and perhaps people are discounting that a bit. What do you think people are discounting? Is it discounting the feasibility study? Are they discounting your ability to put it together? Are they, as precious metals come off a bit now? I mean, where's the disconnect?
I think the history of the project, it still hangs around. The project used to be called the Puffeat Lake Mine. Bad name. I just rearranged it. I admit I changed the name, not to rebrand it away, but just to make it more modern. PL. The history of the project was challenged. They built too big of a mill. Let me back up a couple of steps. See that big blue box outside that we just saw and walked through? That's too big of a mill for the original project. The project runs better at 500 to 600 tons per day, not 1,000 tons per day. They tried to mine it at 1,000 tons per day. If you go on my Twitter feed at Minnova CEO, you will see a failure report the executive summary that I posted for everybody to see, that basically highlighted the reasons for failure back in 1988. And it was really very straightforward mining issues, and not because the deposit was a failed deposit, because management made decisions back in the day that forced the project to be too big. Building a big mill and telling your very competent mining staff and mill staff at the time to mine at 1,000 tons per day, they run too many tons. They diluted the ore body, and that was the reason that it failed. It wasn't until halfway through the very short mine life at the time, that they started to scale back, and senior management of the company at the time, Pioneer Metals, it's long gone now, 1988. That they finally acquiesced and accepted that, oh, you're right, we should be running this at a smaller rate with smaller equipment to maintain. The number one rule in mining is grade over tons. In small scale mining, in narrow vein mining, grade over tons. We're not an open pit operation. This is a narrow vein gold deposit. So focus on the grade, keep your dilution down, keep your mill running at an optimal capacity, and you'll be a success. And I think most people that kind of, peel back the layers of the project. So again, to your question, the history of the project as a failed project back in 1988, I think has been addressed adequately in the feasibility study. with the resource and reserve development drilling that we have done. So we've got lots of data. The mine, the geological resource is sound and traceable. And now it's just, and then we had needed to wait for a market that was sort of paying attention, the gold sector. I'm not worried about the $100 up and down right now in terms of gold price volatility. I'm more worried about what is the longer term outlook for gold. Does this market hang in there? And there's an optimism given the kind of crazy macro environment that we're in currently, that gold price will be higher tomorrow than it is today, figuratively speaking. Me and my investors feel that way, and that's why we diligently just keep advancing this project, de-risking this project, going through all the steps to deliver a real leverage, real production to our stakeholders, and then hopefully we get that all done literally in the next year, 6 months. All that's on the table right now, and if the market's still not there for it, we'll keep drilling. We'll take our global resource from about 700,000 ounces. We'll take it up towards 1 million ounces. That's a key milestone for many investors out there. They're sort of stuck on that. Fair enough. We don't need to do that because we're one of those situations where we're ready to go right now, and we will add to our resource from cash flow as we are producing. So I hope that answers the question for you and your investors. And again, if you check out Twitter at Minnova CEO, there's a failure report there. There's other sort of supporting documents that I can walk through with people to address that concern. But to me, it's more about nowadays it's just about marketing. Letting people like you understand the project, beat it up like I do, and come away with a conclusion. I think most people will come away with a reasonably positive conclusion. That's my job, is to get them to that side of the value proposition. And that's a question of, go buy some stock. It's cheap. We're a good little company. I think we're operated well. We're in a good jurisdiction, and we got, as I hope I made the point, we got a lot of positive attributes from near-term development, for near-term development.
Okay, well, Glenn, I guess what we want to see is some actual movement, going forward. Like you're talking about a year hence and lots of things that you've got to do. I want to see what those things are over the next quarter. Say, what are you going to deliver next quarter? Have you got the money to be able to deliver those things? And so what if you do? I mean, that's kind of more meaningful and more timely, because there's a lot of people out there, a lot of companies talking a good game at the moment. And in this environment, there's, even more at the table than there were, 12 months ago. So it's hard to stand out. And I just wonder what you're going to do that's going to change from what you've been saying for the last, 6 months, 12 months, that's going to make a difference.
Yeah, nothing's really changed in our development plan. Again, we're an unusual company. We don't need tens of millions of dollars to systematically advance the project. We'll probably do $1 million, $1.5 million here at the tail end of the year to start drilling in January and February, generate news, generate results. That'll all feed into a updated resource calculation. So if you're looking for project milestones, there's news flow from drilling. There's news flow from, that's on-site drilling and off-site drilling, exploration, upside drilling. And then there'll be a resource calculation, probably mid-year, which will inch us closer to that 1 million ounce mark. During that next 6 month, H1 of 2021, I'll be working on my project financing. I'll be working on my management team. I'll be working on money, more money, project finance money. Gold price hangs in there. We're set. I'd like to think that we are golden. And that's all in today's market capitalization, pretty darn attractive as far as I'm concerned. So we see a path forward. We've got a plan going forward at a very reasonable budget. I've got many investors that say take more money than less and mount bigger, longer, more sustained programs. I agree. It's a question of balancing our very good share structure. I've always been looking to develop the company, the project, with dollars per share earnings in the future, like not pennies per share, dollars per share. I just told you, again, this is something you can flex in the feasibility study, mine model. It's in the sensitivity table. At current prices, you're doing over $60 million a year. That's $1.50 per share at current capital structure, right? Obviously, that'll change going forward, but these are pretty good numbers. What is the market? My question to you is, and your viewers, is what value do you think should be put on a project that has significant infrastructure, has a near-term production profile because of its permit, is in a good jurisdiction, on and on and on, and can achieve production in a relatively short period of time, and has exploration upside? So the question to you is, what do you think that value should be? Is it $10 million? There's nothing, well, I don't think it is. You shake your head, I'll shake my head. Anyways, it's fun. It's fun with numbers. It's a serious development project. We have fun while we're doing it, of course. Lots of snow to move and stay alive up here at -30. But it's a serious project. It is near term. I hope that you and your audience, which is growing, appreciate it. If people have questions, they can DM me on Twitter. My contact details are on the new and improved website, which should be up towards the end of next week, I think, or this week, sorry. Get a hold of me. I'm here. I answer the phone. I'm on WhatsApp all the time, taking people through the mill, walking them around the site and highlighting our value proposition and talking about our peer group.
Beautiful.
And where we fit in.
Beautiful, Glenn. Look, great story. Look, I appreciate the run through the mill, actually. I quite enjoyed that. And to answer your question, are you only worth 10 million? No, you're not. You're worth more than that. It's for people to work out how much more is the question. So look, we will stay in touch because I want to see how you get on. You made some promises about the sorts of things that you're going to be doing. And I think one of the big promises that I think investors and wannabe investors have made to us is you need to talk to them more. They want to know what's going on because they obviously like it, but they don't hear from you very much. So stay in touch.
Yeah, very good. Thanks, Matt. Thanks for your patience. Ciao.